Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and what if I told you guys that institutional investors right now in Wall Street are absolutely fleeing the housing market at record fashion? In fact, what if I told you the #1 institutional investors of single-family home rental homes is actually selling more houses than they're buying? As a consumer that doesn't think the housing market's going to crash, I would be asking myself, what might they know that I don't know? We'll dig into all of those things today, you guys, and I'm actually going to reference 3 articles. Now, I have to do this video on the run because I do not have time to do a video properly in my studio, so you guys please bear with me. I'm going to take you guys around town and kind of show you guys what I do when I'm not making YouTube videos. But again, you guys, listen, before I begin, do me a favor, help me grow. Like this video, subscribe to my channel if you haven't already, and don't leave your boy hanging, okay? Shoot me a comment below, share with me some of your opinions, share with me some of your insights, because I am learning from you, and so are a lot of other people in our community here at Real Estate Mindset. So, the name of the first article that we're going to review today, and it's from CoStar, but the name of the article is Largest U.S. Single-Family Rental Owner Seeks More Growth. Invitation Homes look at potentially buying firms stuck with smaller inventory. So that's the headline, guys. So we're going to start there, but then we're going to take an even bigger deep dive into who Innovation Homes really is. And then we're going to look at, is their company really okay? Or are they freaked out like, everyone else in the country about the housing market? And here's the thing. No one has a crystal ball. I side with caution. I share my opinion. I speak a little bit boldly on my opinion because I believe we are in a time where caution is extremely advisable. But at the end of the day, we all have to make our own minds up when we purchase. But I definitely think it's a smart idea to look at the people with money and what they're doing. Alrighty, so I am at my destination, about to go into Keller Williams to help the team leader actually do some videos. I absolutely love doing videos, and I love this branch. I'm not gonna plug the exact branch, but I absolutely love them. Great realtors there. But anyways, guys, when I'm reading this article about Invitation Homes, do me a favor, and I really want you guys to hone in on their intentions and what steps and moves they're making in preparation of what is to come. So let's read this, guys, and again, just take note of what they're doing and ask yourself, should you do the same thing as what the #1 institutional investor is doing right now? Invitation Homes, the nation's largest owner of single-family rentals, has a couple of $1 billion of dry powder. So they have a couple $1 billion right now for would-be mergers or acquisitions. They plan on people going out of business, and they want to scoop up other smaller institutional investors so that they make even more money. So let's go on. The preparation for potential M&A activity comes as Invitation Homes is reporting first quarter earnings Tuesday. Now, the earnings saw a 30% jump in year-over-year net income in the quarter to $120 million. That profit comes as it has become increasingly difficult for Invitation Homes, like other U.S. buyers, to find homes for sale, reflecting the national shortage of housing, or rather, the lack of affordability in housing. So we got a few things going on. One industry source estimates U.S. housing shortage at 6.5 million homes due to decades of builders pulling back on the number of homes they produce. And here's the thing with that comment, y'all. The number of homes that builders have been making and producing has actually been going up, not going down. It only recently started going down, so I don't really know what that means. And here's the other thing. If we had right now, say 800,000 homes come onto the market, it would immediately be a buyer's market right now, and we would see massive price crashes. So this whole 6.5 million, y'all, we don't need that. We need maybe 800,000 homes, and this crash is gonna be kicked into the next gear. They go on. If you don't have a significant portfolio today, I don't wanna say that you have stuck, but it's going to be harder to grow. Scale is going to be more beneficial over the next couple of years and should benefit companies like ours in the real estate investment trust space, where we have very low leverage and generally access and availability to different buckets of capital. What we know is Invitation Homes plans on doing acquisitions and mergers for other real estate investment trust companies. And they've essentially got out of the housing market. They have billions of dollars on the sidelines. So far what I'm seeing is the number one investor, okay? They know something right now that has basically pulled them out of the housing market and caused them to stop, save money, and prepare to get rich. So I wanted to do this scene for the next part of the video because this is where I learned how to talk to people. Classes just like this. And this is actually what I do as well, you guys. So I help with video, but I train. Do y'all see that? And I can assure you, everyone that comes here and trains listens to my videos. So these are, this gives me a good ability to actually train people, to talk to realtors, and just grow together. So I thought you guys would think that was interesting. I've been doing this for about 5 years, getting in front of everyone, embarrassing myself, and doing the best I can to help them grow with education. Nevertheless, let's go back into Invitation Homes and see what they're up to. Invitation Homes has a new product pipeline approaching $1 billion. The Dallas-based company entered into a 5-year deal in 2021 with Pulte Group to purchase 7,500 homes during that time. So they put together an agreement with a new home builder to build a whole bunch of houses in 2021. Amazing. Let's keep going. Other developers and builders have approached Invitation Homes with similar offers. He declined to disclose the names of those developers and builders. And obviously, you guys, what builder doesn't want to sell a block of 7,500 homes, right? For Invitation Homes, rental rates continue to grow. The same store new lease rent growth of 5.7% and some store renewal growth of 80% for the first quarter. Rates are expected to continue to grow this year with preliminary April results of new lease rent growth of 7.5% with renewals and 7.2% with average occupancy of 97.8%. So I would say they're pretty profitable. Those are actually pretty solid numbers for investors in real estate. So again, the next thing that I would ask myself, well, if their numbers are so well, if they're reporting a 30% come up in income, then why the heck are they selling more homes than they're buying right now? For the next scene, I'm gonna go sneak into my operation manager's office to do it because there's so many agents in here right now. It is becoming really hard to find a place to actually film. And what we're gonna do next, guys, is we're gonna talk about what acquisitions that they plan on doing. So we'll deep dive into the acquisitions. I just had to find a place to do this real quick. So pay attention to what they're doing as far as acquisitions. Our focus the last couple of years has been building out a much more robust new product pipeline, which today sits close to $1 billion. We are really excited about that product as it is coming into our portfolio both this year and years beyond. So obviously they plan on purchasing for several years. And again, it's interesting to note, but they've decided not to purchase right now. On existing homes, Tanner said, the resale environment has been limited in the past 3 to 4 years, which can make it difficult for new rental groups to build up scale in certain markets. For Invitation Homes, which has scale, this could lead to some opportunities, he added, which essentially is saying that a lot of people that are going to get into the real estate investment trust niche are going to sink and they're going to fail because, quite frankly, there's not a lot of good deals and not enough good deals to sustain a new company that is obtaining a new portfolio of single-family rental homes. So in other words, they're treading lightly. As we see some of these smaller operators who are having trouble getting scale or sizing up, there could be opportunities with potential M&A over the next couple of years. I think we will stay aggressive in our new product pipeline. We have obviously always looked at things as the resale market changes, and we are ready. Invitation Homes was a net seller of homes in the first quarter of this year. In all, the company sold 284 wholly owned homes, resulting in gross proceeds of a whopping $95 million. So about 284 of their homes equals $95 million. Pretty crazy to think about. Well as 13 homes and joint ventures for $6 million. Invitation Homes also bought 181 wholly owned homes for $62 million and 13 homes and joint ventures for $5 million. Most of the purchased homes comes through the company's builder partner. So it's very interesting to note that they've got out of the resale market pretty substantially and actually have gone into new home building. Very interesting to note. And so what I would ask you is, what opportunities do y'all feel that we as consumers will have in the future? Now, obviously, as I've been telling y'all to pay attention to new construction. There's a lot of inventory with new construction. We're already seeing new builders offering insane buying incentives. Is it time to buy right now? That's up for y'all to decide. Alright guys, next I'm going to go over an article and some details from Calculated Risk. Now before I do that, I'm feeling kind of cute and I may actually come in here and interrupt a class. I love those guys back there. I don't know if you can see them. We all learn and train together. Just wanted to show you guys that I'm feeling extra cocky today. But anyways, guys, let's take a look at this article, see what it has to say. Invitation Homes, the largest publicly traded holder of single-family properties, reported that it disposed of slightly more single-family properties than it had acquired last quarter. And that most of the small number of properties it acquired last quarter were from builder partners. Very interesting. It was not resale. Very interesting. So they pretty much are acknowledging that they've got out of the resale market entirely. According to its press release, Invitation Home acquired 197 single-family properties in the quarter ending 3/31/23. Again, of which 151 were new builds. And here's the crazy thing, you guys, it disposed of 295 single-family properties. By comparison, in the previous quarter, the company had acquired 166 and disposed of 199. As a result, the company's total SF rental property holdings declined for the second straight quarter last quarter. Here's a table showing the acquisitions. So the interesting thing, guys, is it's not new. It's actually been going on for 2 straight quarters. And again, for me, I ask myself questions like, why? Why have they decided to not buy any resale houses? And why have they decided to kind of sit back, accumulate money, and to do mergers and acquisitions later this year? It's probably because they expect the housing market to continue to change. Now, if we look at this chart, just for comparison, you can see that they actually acquired at the end of 2021, 1,540 homes. 15 months after they bought 1,500 homes, they now are only buying less than 200 homes. Again, think about that. What do they know that we don't? And you guys, here's the really, really good news. It's not just Invitation Homes. Many institutional investors right now are taking a break from the housing market. And the thing is that's exactly what we need as consumers waiting for the housing market to balance. Here's the thing, why wouldn't institutional investors come into our market buying up a whole bunch of houses? I mean, we had record low interest rates, right? And we had record high appreciation. So it kind of makes sense that we had an overwhelming demand problem from institutional investors. And this video isn't necessarily about, what's right or wrong, although I do think we need to figure out something to do to curb such strong demand. Single-family residential houses that are affordable generally and normally go to first-time home buyers. So first-time home buyers, because of all of this institutional investing, are getting absolutely rocked. Now let's switch on over to a different article and read a little bit. It makes sense. The pandemic housing boom saw a flood of institutional home buying. Low interest rates, easy access to capital, soaring rents, and skyrocketing home values were just too good a deal for Wall Street types like Blackstone, iBuyer players like Open Door Technologies to pass. Of course, that's all over. Now, thank goodness, institutional home buyers are pulling back, and guys, they are pulling back fast. In fact, according to analysis conducted by John Burns Research and Consulting, institutional investors, those owning over 1,000 homes, bought 90% fewer homes in January and February than they did in the last 2 months of 2022. So we can basically say that institutional investor demand is down roughly 90%. So all of these people buying right now, I believe, again, most of the people buying right now, y'all, are first-time home buyers that are making emotional decisions. Not everyone, right? Some people may be able to find a great deal, but I'm saying, y'all, most of the people. But now take a look at this next part. Look no further than Invitation Homes, the largest owner of U.S. single-family rental homes, which recently became a net seller. For the last 2 months, they have been, like we went over, selling more than they've been buying. And if we look at this chart here, we can see between Q1 of 2021 and Q2 of 2022, look at all of that buying. I mean, they bought a substantial amount of houses, guys, and these are single-family residential houses. These are not apartments or multifamily. We're talking SFR. And you guys can see after 2021, they started curving that type of purchasing rapidly. And here's really the point of this video. I understand that house values right now appear to be rebounding, but here's what I'm saying. The people, the elites, the people with a whole bunch of money right now are removing themselves at historical pace from the housing market. And to me, what I'm saying to you guys is that's just another additional red flag that I believe that people need to pay attention to. Now, I don't have a crystal ball. I don't know everything that's going to happen, but I do know for a fact there is an overwhelming amount of red flags. Investor demand being crushed and investors running from our housing market is a red flag, and that may be one of the most evident red flags of what's coming down the pipeline. And that's really what I'm saying. Be cautious. If you're gonna buy real estate, fine. I don't wanna make the decision for you, but make sure you're using the data to find the deal. And other than that, guys, do me a favor, like the video. You know how hard it was and embarrassing it was to run around this office right there? It was difficult because there's people everywhere, and look at the things that I'm saying in the office. But either way, guys, do me a favor, like the video one more time. Please, guys, like the video. And other than that, if you're out there investing in real estate, you know I wish you luck, and I hope you